The real question is this: was all this legal? Absolutely fucking not. But we were making more money than we knew what to do with.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks pushed higher on Thursday as Wall Street digested fresh labor market data amid rise in rate cut bets, with risks to Federal Reserve independence also in focus as a Senate hearing to confirm Stephen Miran took place. And actually, stocks were very bullish here today. Mega caps, tech stocks, everything included. In fact, some of the names that weren't so bullish was actually Google. But this is coming off an 8% day yesterday. So, giving a little bit back, nothing crazy. Still a very good week here for Google and all Google shareholders. Apple down 0.18%. And again, same with the Google situation. It was up about 4% yesterday. Just giving some back. It's how market works. You give some, you take some. We saw CRM and some of the software names take it a bit on the chin after Salesforce reported their earnings. Their stock was down 5%. Texas Instruments was down 4%, and Nvidia was largely flat on the day. Other than that, right, everything else was actually really good. Amazon led the charge for mega caps along with Meta, Netflix. Microsoft is up 0.42%. The banks were very bullish today. In fact, every single sector gained here except utilities and staples. And these are your quintessential defensive sectors. Maybe utilities has more of an AI trade right now, but these quote defensive sectors were down. Gold was down 0.59% today, despite the Fed independence talks. We'll talk about that a little bit later on, but every single sector gained. Everything from real estate to the XLY discretionary completely outperforming, even second place up 1.53%. Financials up just shy of 1%. Industrials just shy of 1%. Really, the cyclical sectors, rate cut sensitive sectors really just outperformed today on the back of some of the economic data. And again, we'll get to it with the S&P 500 up 0.56%. We saw small caps outperform, really higher beta, rate sensitive names really outperform today. Value core and growth beat mid caps, beat small caps, and we did have some outliers. Large cap growth was up 0.71%. Mid cap core was up 0.7%. But you can see this again outperformed by small cap growth, and really the market saying, hey, if we're going to get rate cuts, the place I want to be is mid caps, the place I want to be is small caps. And really what fueled today's move had to just do with this right here, the ADP employment change. Now, the numbers came in at 54,000. The consensus was for 65,000. So again, the market sniffing out, hey, the labor market is weakening. However, one thing to note, the previous number right here, this was actually 75,000, right? So we actually had a massive up revision, a 30,000 or 31,000 revision to the upside. The market kind of ignored that though and said, hey, this month's numbers came in weaker than expected, and that fueled rate cut bet expectations. Elsewhere, we also had the ISM services report from the Institute of Money Supply, which showed economic activity in the service sector rising more than expected. That came in at 52 versus the consensus of 51, and actually beat the previous number of 50.1. So another month for the ISM in expansion and territory. And however, something to note from this report, there was actually sluggish hiring in the sector, as the report said employment shrank for the third consecutive month. Together, this data served as the latest sign of shakiness in the labor market after July jobs openings were lower than expected, fueling confidence that the Fed will lower rates in September. And if we look at rate cut expectations, it is now officially sitting at an 87% chance of a 25 basis point rate cut. This is up significantly from just a couple of days ago, which was very close to the 72% range after the jobs data and some of the data that we got today. What's also moving markets is Stephen Miran's confirmation hearing. Now, Stephen Miran is getting confirmed as the latest Fed governor after Kluger resigned. And this was very interesting. Now, his confirmation won't probably happen until much later after the market closed. But Stephen Miran says he plans to take leave from the White House job if confirmed to the Fed board. He said he's actually going to take unpaid leave, but he does not intend to resign. So he's just going to take unpaid leave, but not resign. And this would be absolutely unprecedented, right? This is literally like Fed independence being shattered. You have one of the Fed governors working for the president in the White House, technically, right? I know he's on unpaid leave, but we'll see how his confirmation hearing goes. That being said, there's going to be a lot of questions of Fed independence. And continuing on that train, the DOJ officially opened up a criminal investigation into Lisa Cook. Subpoenas were served. And this goes to the Fed independence question. But in my opinion, this Lisa Cook character, she's an actual criminal. She needs to be investigated and she needs to be charged, right? You cannot have Federal Reserve governors lying on their mortgage applications. Mortgage fraud is a crime, and she needs to be prosecuted to the full extent of the law. And then looking at some other market movers, Figma, the design company that just IPO'd not too long ago, fell 18% after its earnings. Now, it beat on revenue, but missed the earnings per share estimate by a lot. In fact, the market was expecting 8 cents. Figma came in and said, we didn't even grow our earnings per share this quarter. The market didn't like that, and the stock got sold off. Brutal price action. I mean, it IPO'd at what, $45? It's near its IPO price. Absolutely crazy price action we've seen here for Figma. American Eagle was up 34% today after reporting its earnings yesterday after the close. And all I can say is America is back. The company guided for $250 million in sales for the quarter. The expectation was for $175 million. And this is all thanks to the Sydney Sweeney campaign. Sydney Sweeney is taking American Eagle to the moon. The market likes it. That's a massive move. And I actually wouldn't be surprised to see $20 in the near term for American Eagle. Looking at Salesforce, they were down 5.12% after actually providing earnings that was roughly in line. I think the market's expectation, though, was for like a massive beat because, the CEO, Mark Benioff, just a couple of weeks ago came out and said our pipeline has never been more full. And then Salesforce proceeded to release like the most uninspiring quarter ever. I think in such a situation, market's just going to sell off the name. And that is why we saw this. But we did pair some of the losses here. And I do think based on the numbers that we got, Salesforce will continue higher. But this is just going to be a minor headwind in the near term. And then Google was down 0.1% today. And there was actually some more news. Google has had a crazy news week. But the Bank of America analyst, Atif Malik, said in a note on Thursday that Google has the potential to grow its TPU units sharply next year. Google's AI chips, called Tensor Processing Units or TPUs, are presenting a greater source of competition for NVIDIA. The note followed a report from The Information that Google has approached small cloud providers about hosting its AI chips in their data centers. So Google could be somewhat like an NVIDIA supplier to these smaller data centers. They have the scale and they have the software stack to definitely go out and compete with NVIDIA. But then for everything we saw today, guys, there was 3,400 advances, 2,800 decliners. We saw net inflows. We saw net outflows in the NASDAQ 100 and the New York Stock Exchange. The S&P 500 was up 0.57% here today. And market momentum continues to remain really solid. We saw a massive improvement from yesterday here in the 5-day, as you can see, and we saw improvements across the board from the 20-day to the 200-day, and we still haven't lost the 50% mark in all of these categories right here. And this is telling us momentum is still on the side of the bulls. And ultimately, as long as these hold through September, and we're nearly done the first week of September, as long as these hold, this is just an opportunity to buy the dip, buy any weakness for us to retake those all-time highs in the NASDAQ 100, the S&P 5, and the S&P 500. Now, guys, looking at the charts, you can see a fairly positive day for equities. Everything from the mega caps to small caps outperforming. We're also seeing some mild underperformance here in the broad market, but the RSP taking the cake. Profitable small caps up 1%, mid caps up 1% as well. Growth outperforming value, but both up today. And that is coming off what has been a pretty weak start to the month of September. So a bit of a bounce, but a green day nonetheless, and we're still trading at nearly these weekly all-time highs right here. Now look, the price action of the S&P 500 at these highs, not looking too constructive, but can you blame the market after a 30% rally peak to trough in just a couple of months? A fairly bullish day for equities, and you take these days as they come. Now looking at some of our international markets, European stocks were green along with Middle Eastern stocks, but we saw a bit of volatility here in Asia, in India, in China, down 0.91%, India slightly down. And I think a lot of that volatility came from crypto as well. Bitcoin was down 1.5%. Ethereum is down 3.82%. Very ugly day. They're still holding these key levels of 100,000 and 4,000, but we're seeing a lot of volatility. However, we did see a very green day yesterday in both these names. So giving some back, but it looks like they're giving all of the names back. And if we actually go to some of our Ethereum proxies, BMNR, Bitmine Immersion Technologies. We can actually see right here that Bitmine is down 7.47%. So it is somewhat of a levered play on Ethereum. And then if we actually go ahead and look at MicroStrategy, or Strategy as they now call themselves, Strategy was down 0.91% when Bitcoin was down 1.51%. So MicroStrategy is still outperforming Bitcoin, but we could see MicroStrategy hasn't acted super well ever since Michael Saylor issued the preferreds for MicroStrategy, and then we've seen the stock sort of just crater, but Bitcoin has also fallen in the same time period. Yields were down on the back of Fed independence questions, what we saw with Lisa Cook, as well as the economic data. The 2-year yield was down 0.75%, the 10-year yield down nearly 1%, approaching the 4% mark. So the market's saying, hey, we're looking at rate cuts, and now the market pricing in the 2-year at least about 90 to 100 basis points worth of rate cuts. Absolutely insane. The Fed funds rate is 4.5%. So to see this at 3.6, the market's saying we're looking for 90 basis points of rate cuts, potentially 425 basis points worth of rate cuts through 2025. That would be really, really good for the housing market. In fact, we're seeing mortgage rates act in kind. Mortgage rates hit the lowest level since October 2024 just recently. This activity will boost the housing market as well as business activity. So mortgage rates are also acting in the same way that rates are acting right now, and that's really, really good. And that's pretty much telling us the flow-on effects of these lower yields is being felt by the economy, and that's exactly what we need to boost economic activity so that growth doesn't slow to a crawl. The dollar was up 0.18%. TLT gained ever so slightly. We saw gold and silver commodities take a little bit of a breather as we saw a bit of a risk-on move here into equities. Very, very solid day, but let's talk about the S&P 500. Let's look at the weekly chart. So firstly, I said this almost every day. The weekly chart looks really, really good. We are forming what looks like an island top here. You know, we've got a couple of dojis. We've got a couple of candles and wicks at the top, at the bottom. A lot of indecision, both the bulls and the bears coming in. But ultimately, for the year, you have to give it to the bulls. The bulls have definitely won the year so far, but that's not to say we can't have a volatile September. And I am expecting that. Now, if we dive into the daily chart, right, this was the weekly chart, we can see that to kick off the week, we sort of had this massive, a gap down. However, the bears came in, bought the dip pretty much every single day, including today, and we're actually trading near the highs of the day and near all-time highs. So we may actually go ahead and make an all-time high, especially if we get the economic data for the NFP tomorrow. I think if we get roughly in line data, we probably could see all-time highs. What's also very constructive is we did put an equal low right here. Very, very interesting. So the market going on and saying, hey, if we're going to get rate cuts, we're going to use a cheaper discount rate. If we use a lower discount rate, the market as a result can rally. And we're trading pretty much near all-time highs. There is absolutely nothing bearish about this. And we had September seasonality for about one day, and the market, fell. And now we're back up to rallying. But September isn't over. We're only in the 4th or 5th day of September, depending on where you are in the world. And, we still have a lot of September left to trade. And I wouldn't be surprised to actually see us, trade at these levels, especially if maybe we get extremely weaker than expected economic data. Then the market starts to question, will even a 50 basis point cut be enough? What does that need for stagflation, etc.? And some of the economic data, especially some of the labor market data, is a little bit concerning. And once that worry materializes, then we can actually see a sell-off. But as it is right now, any dips we do get, if we get dips here to the 6,300, to the 6,200, buy those dips. I've been championing that pretty much all year. All dips are just buying opportunities. What's going to be a banger 2026, especially as we start to see mortgage rates work for the market. If we get a lower mortgage rate, right, that's going to boost business activity, housing activity, residential fixed investment. That's going to boost our manufacturing activity. And we are starting to see that happen. And that's going to drive growth in 2026. Looking at the NASDAQ 100, not quite at all-time highs, but still very, very strong momentum off the gamma flip right here. And I actually wouldn't be surprised to see some of these mega caps go ahead and actually retake some of these highs. We're seeing strength in Google. We're seeing strength in Apple. We're seeing strength in Meta as Nvidia takes a bit of a breather. We also saw some very solid strength in Amazon today. Amazon out of nowhere up 4%. Let's just check if there was any news here for Amazon. Yeah, Amazon was up 4%, and there wasn't even any news. So I think the market is really just saying lower rates are just going to mean the discretionary consumer can spend more. Coupled with the AI trade, Amazon is in pole position to take advantage of that, and that is why the stock had a massive gap up go and virtually trading at all-time highs here, just a stone throw away from all-time highs for Amazon. Now, looking at Bitcoin really, really quickly, guys, continues to trade here at this very, very key level. This is the absolute key level that we need to hold. The bulls need to step up right now. They kind of have at the lows right here, but we just need to consolidate and then make our next move to the upside, breaking these all-time highs. I'm still looking for a 135,000 target. Why do you ask? Because global M2 money supply is telling us Bitcoin should be about 135, 140,000 by the end of the year. Now, Ethereum, what we're seeing in Ethereum is very, very constructive. We're really just seeing Ethereum as a whole just consolidate in this fairly wide range, making new all-time highs, definitely not falling below the 4,000 area. And this is very, very constructive price action. The longer Ethereum does this, the bigger the base, the bigger the rip is going to be to the upside. I still see, 6,000, 7,000 Ethereum by the end of the year. Pretty wide price target, but that's what you get with these high beta assets. That being said, as long as we hold this 4,000 level right here, onward and upward for Ethereum. And then guys, in this dip, what stocks should you buy? Well, look, I definitely do like Google in the mega cap names. And look, Google is not expensive as well. If you assume $2.50 worth of earnings, which I think it's going to be higher, and you annualize that, that's about $10 in earnings per share for the full year. The stock currently trades at $230, right? That means the stock right now is trading at a 23 times multiple. That's not crazy for a company like Google, who has such a wide moat, and you can see the market starting to price that in. And it does look like the stock was a great buy here at the 150 area, trading at like 17 or 16 times earnings on $10 in earnings per share. Other names that I do like, and I'll say it again, Lemonade officially below the $50 mark or at the $50 mark. This is a buy right here. We think this stock is going to be significantly higher at the end of the year. And another name I do like is Lit. I just think it's just really, really cheap. Look, it's definitely second place to Uber, but it doesn't mean you can't make money. I think this is a $20 stock by the end of the year. Diving into sentiment, this is the AAII sentiment survey. And what we saw last week was a pretty big tick up here in bearish sentiment, a slight move lower in bullish sentiment, and bearish sentiment continues to remain elevated, remaining above the 39% mark for 4 consecutive weeks. This aligns with September's historical tendency to be the weakest month for the S&P 500. With bullish sentiment still above its long-term average, however, investor caution supports the expectation of seasonal softness. This sentiment backdrop reinforces the likelihood of weak S&P 500 performance in September, and we actually typically see September return about -2%. We actually just see lower lows, lower highs through the end of the month, where we can actually see returns again, upward of -2%. However, when we look at the very long term, right, after we've had a green May, June, July, and August, what are the returns we can expect for the rest of the year? In other words, 2025. And this does include September. The average return is about 3.8%, but it gets really, really spicy when you look at the median return. So a bullish time period right here likely means we're going to get returns anywhere between 4 to 6% to end the year. And this includes a pretty average September. So if we do get a pullback in September, which we are seeing right now, buy that dip, because we can see outsized returns that tend to be 70% higher through the end of the year and 80% over the next 12 months. So ultimately, guys, buy the dip, because the seasonals are telling us that, the data is telling us that, and also earnings looking very strong. Q2 earnings sitting at about 13%, smashing the expectations. And if you actually exclude the energy sector, things look much, much better. You're looking at mid-teens earnings growth, 7.4% revenue growth, right? Even margins coming in above expectations. It has been a spectacular quarter in Q2. Now, when we dive into the macro, guys, there's some good things and there are some bad things. I think the best thing is that we're seeing growth re-accelerate here. We saw that in Q2 with a 3.3% GDP print. We're now seeing a 3.5% tracking for Q3. This is the Fed's GDP now. However, there are some concerns. Number one, inflation is running hot, and it isn't just core goods. Core services ex housing is at 4.7% annualized, 3.3% over the last 12 months. Inflation is broadening out across many PCE categories, and we have rate cuts on the way. Furthermore, we got the jobs data yesterday, and construction quits, a leading indicator, is now at GFC levels. Guys, this is not a 4% Fed funds economy, okay? There are some indicators that are looking very concerning on the inflation side, on the labor market side. That leads to stagflation, and the Fed need to react now, and they may even be a little bit late in this impulse. But ultimately, the breadth of the rate cuts is going to be dependent on what we get here with the non-farms tomorrow. Now, the expectation, the consensus forecast is for 75,000. We're looking at an unemployment rate between 4.2 and 4.3%. We're not going to get anything in the middle, so it's going to be one of these two numbers. If we get a 4.1% unemployment rate, I think that can cause a lot of fireworks on the side that, hey, the economy is not as bad as we think it is. However, what does that mean for rate cuts? Does that take a September rate cut off the table? I don't think so. But right now, the argument is 25 or 50, and that probably leads to a 50. But we also need to look at average hourly earnings, these figures right here. The market wants a 3.7%. But ultimately, this is a number you want to look at, the payrolls number and the unemployment rate. This is really going to be dependent if we get a 25 or 50 in September. There's literally no earnings tomorrow, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.